Given that inflation, whichever measure you choose, has either sort of remained where it is or not increased over the past year as you've been dropping the policy rate, what is it that gives you confidence that the Fed has the tools to get inflation back up to target or even overshoot, as you just indicated that some people are considering doing?
Well, it's just that there is still empirically, by many different, by the work of many different analysts, there is a relationship between resource utilization, by which I mean unemployment, and inflation. It's just relatively weak. And by the way, that's not a bad thing. That means that we can run at low levels of unemployment and have a historically good, in some dimensions, labor market without having to worry about inflation. It also means, though, that it's not easy to move inflation up. Now, you say, why is there confidence? I mean, I would say there's more humility than there is confidence in this at this point. It's been very challenging to get inflation to be at target. If you look around the world, the United States, of all major economies, has been closest to it, but still hasn't quite been able to achieve it. And I would also point out that this year, which has been a good year for the economy, inflation, core inflation, is actually running at 1.6%, whereas it ran close to 2% most of last year. So it's a real challenge, and but I think we're using our tools as best we can to meet that challenge.
Nick Timmeros, The Wall Street Journal. So, Chair Powell, I want to ask about the framework review, which obviously entails some kind of debate around allowing an overshoot of the 2% target. And in that context, is merely saying that you want inflation to rise above 2% a sufficient strategy for getting inflation to stay at the target, or would it compel some kind of policy action beyond deferring future rate increases to achieve that outcome, if that's the direction in which the committee goes? In other words, it's one thing to accept inflation rising on its own opportunistically, but if inflation does not materialize, would a change in the framework necessarily make it easier to generate higher inflation?
Well, I think the answer to the question of whether saying it is enough to create credibility, the answer to that is no. And I think you have to back that up with policy that supports the outcome. And that's what we're trying to do. And so the changes that we're looking at to the framework are I think they take all of that on board. But what they are designed to do is to strengthen the credibility of that inflation target, but only if followed by policy. Ultimately, it will take time to move inflation expectations up from where they are, which appears to be a bit below 2%, will not happen overnight. It'll have to happen over time as credibility is built. The Fed has great inflation credibility, but inflation expectations are anchored at about their 25-year average, which is a few ticks below 2%.